Hello everyone, my name is Drew Kolz and I am currently a senior at Marquette University. I am a domestic industrial analyst for Marquette's AME program, and today I'm going to be pitching the stock AMETEK Incorporated with a ticker of AME. To begin, AMETEK Incorporated is a leading global manufacturer of highly differentiated technologies in aerospace, automation, power, and several other markets. The company conducts just over half their business in the United States and the rest for many other countries, including the United Kingdom, China, and Japan. The company was originally founded in 1930 and is headquartered in Berwyn, Pennsylvania. On the right, you can see some information about the stock itself, including a 12-month price chart. After doing extensive research on AME, I have summarized why I believe AME should be added to our portfolio. First off, with over 17,000 employees serving 30 different countries worldwide, AMETEK specializes in becoming the market leader in small niche end markets. Secondly, management has a proven track record of acquiring companies and turning that into revenue growth. In 2021 alone, AME acquired 5 companies. Finally, despite the heavy amount of capital spent on these acquisitions, AME still remains flexible with over $2 billion of liquid cash for further future acquisitions. The first driver for AME is their acquisition-driven growth strategy. In 2021 alone, AMETEK spent over $1.9 billion to acquire 5 different companies. These companies include Abaco Systems, Magnetrol, NSI-MI, Crank Software, and EGS Automation. The largest acquisition of these was Abaco Systems, which was purchased for $1.35 billion. This firm is known for its embedded computing systems that help deal with extreme temperatures and altitude in airplanes. Not only does this acquisition broaden the company's product line portfolio, but it also opens the door to many different aerospace and defense platforms. Altogether, these acquisitions should provide nearly $590 million of revenue in fiscal year 21. With a strict evaluation criterion for acquisitions of year 3 of ROIC 10% plus, IRR 15% plus, and year 1 EPS accretive, it is easy to see why AMETEK has been so successful making positive acquisitions over the years. Next, we have the fact that AME is beginning to reap the benefits of a mid-cycle recovery. With trends favoring automation, advanced technology, and healthcare, AME should excel given their current market leader positions in these industries. Evidenced by the company's record backlog of $2.5 billion, management believes that they are able to drive 35% plus incremental margins, despite the estimated $15 million of added G&A expenses. While there are several market trends that favor AME, there may not be a bigger one than a rebound in the commercial aerospace industry. With aerospace sales representing 27% of electronic instrument sales and 30% of electromechanical sales in fiscal year 20, any sort of rebound in the commercial aerospace industry will prove beneficial for AME. Furthermore, with the global airline industry being projected to reach a total addressable market of $744 billion by 2026, growing at a CAGR of 12.7%, AME will see impressive aerospace revenue growth. While AME is not afraid to make large acquisitions, they do not rely solely on these for growth. Management has been good at consistently spending 5% of revenues on RD&E investment. This commitment to research has paid dividends for the company, with sales from new products introduced over the past 3 years being $1.07 billion, nearly 24% of net sales. With this number expected to grow at a CAGR of over 14% during the next 5 years, internal product development will continue to be a revenue generator for the company. Furthermore, with a team of over 2,000 engineers worldwide, management believes that they will continue to expand into new and adjacent markets, a goal that also supports their desire to increase market share worldwide. An intrinsic value for AME was reached by conducting a 5-year DCF model. With a WACC of 6.44% and a 2% terminal growth rate, an intrinsic value of $123.48 was reached. A sensitivity analysis using a plus-minus of 25 basis points on a discount rate and plus-minus 25 basis points on the terminal growth rate produced a range of $97.98 to $163.96. Additionally, an EV to EBITDA valuation using a peer average multiple of 25.79 produced a relative value of $155.27. Finally, a price to book valuation was conducted Using a period average multiple of 9.73, a relative value of 280 and 24 cents was reached. By weighting these methods 50, 25, 25, a price target of $170.62 was reached, giving this company a 23% potential upside. Next, we have the investment risks. Since 2011 alone, AME has made 43 acquisitions. Given that, much of their future depends on their ability to continue to make beneficial acquisitions for the company. If AME experiences difficulties integrating or financing new companies, they risk future earnings losses. Secondly, with the commercial aerospace industry making up nearly 28% of total revenue in fiscal year 20, AME is subject to revenue loss if the industry is not able to recover as fast as expected. Finally, given that nearly 49% of revenue in fiscal year 20 was received from business outside the United States, AME's success relies heavily on foreign countries. If international relationships and policies are to change, AME is subject to adverse effects on their sales. Over the past 10 years, AME has earned a total shareholder return of 424%, compared to the S&P 500 return of 317%. A large reason for that can be attributed to the well-tenured leadership team. David Zapko was elected chairman of the board in 2017 and CEO in 2016. Zapko originally joined AMETEK in 1990 as a product engineer. Along the way, he held a variety of engineering and general management positions. William Burke has been CFO and executive VP of the company since 2016. Like Zapko, he has years of experience with the company after originally joining in 1987. Tony Ciampiti is the president of the Electronic Instruments Division. He has been with the company since 1997. The company also sports a diverse board of directors, with 3 out of the 8 members being female. To conclude, AMETEK Incorporated is a leading global manufacturer of highly differentiated technologies in aerospace, automation, power, and several other markets. By several key acquisitions and a favorable market turnaround, business should soar. Given these factors, it is recommended that Marquette University's Applied Investment Management Fund purchase equity in AME. Thank you all for taking the time to watch my presentation, and if you have questions, please do not hesitate to ask. My email is drew.kolz@marquette.edu, and I will also actively respond on the D2L discussion board. Thanks again.